Good morning, everyone. Today is Wednesday, June 22nd, 2022, and I'm back with another live show. There's lots going on and there's not much going on. the the macro picture, the economy, the stock market are in turmoil, I suppose you could say. And as I speak, Chairman Jay Powell is testifying before Senate Banking Committee, and they're talking about, well, I don't know what they're talking about. I'm doing the show, but my guess is they're talking about inflation and the potential for a recession and all the crazy stuff that's going on. So anyway, it's going to be interesting. I'm going to try and do a sort of quick show today because I'd actually like to listen to some of this and see what's being said. But um, when I say there's a lot going on, the market itself and obviously commodities, inflation, the economy, there's lots going on. As far as potential trades and trading activity, there's nothing going on because of the state of the overall market. The volatility is crazy. We just had a holiday shortened weekend. The market was closed this past Monday, a couple days ago for Juneteenth, and so we're in kind of a period where we're wrapping up the end of the quarter, right? So there's going to be next, well, let's see. Yeah, I guess, next week there's 4 trading days, and that's going to wrap up June. So that's end of quarter. I would imagine that there'll be some positioning, that type of thing. It seems like there's always something affecting the market. Like more recently, last week, um, it was the Fed announcement, right? They raised 3/4 of a point, 75 basis points, and then it's always something. It's a holiday weekend or Powell speaking. Here he is speaking again today, and so he's defending the Fed's monetary policy, which is quite frankly, it's becoming more common knowledge, I think, out there in the world that the Fed kind of created this mess by failing to by failing to raise interest rates earlier, embark on their interest rate cycle, and so they let inflation get out of control. And now, on a day-to-day basis, the big debate is between whether inflation can, what they can do to bring down inflation, what the real cause of it is, and also whether the economy is headed for a recession. And so, like I said a while back, I know I said this a while back because it's pretty common knowledge too, or it should be anyway, that the main cure for inflation is a recession. And so, but the crazy thing is that, the recession debate, there's people out there saying that we're already in a recession. There's people that, a lot of the Wall Street firms are saying that a recession is forthcoming, and it's, yeah, it's an interesting debate. So anyway, I want to jump into something here real quick. I was looking through my charts this morning, and I have like 6 different views of the S&P 500 that I like to look at, set up a little bit differently, but this one's kind of interesting, and I don't want to screw everything up by adjusting the chart. But anyway, long story short, a long time ago I drew a trend line between like these 2 lows back here. For whatever reason, I don't even remember why I did this, and I think this is a log chart. I don't know if I have this set on log or linear, but anyway, I hadn't looked at this in a long time, and what I noticed that I thought was pretty interesting was how this recent sell-off like came down and it almost touched this trend line. Now this is a weekly chart, and today's only Wednesday, but it's kind of interesting. Let me see if this is a log chart or not, because for some reason I always complain about. Whoops! I always complain about how these charts are kind of act weird. There we go. That's a linear chart. Yeah, and if I really zoomed in over here, it's possible that I could be missing this by a couple of pixels or whatever, but just kind of interesting. Um, the market had a big gap down today after a huge, I believe yesterday was one of the biggest up days in June or something like that. It was a huge rally, right? Partially over the holiday weekend, the futures were open. I believe they rallied, but so with the 3-day weekend in there, everything's kind of weird. But anyway, let me switch this to a daily chart just to see what it looks like. Yeah, I mean, here's a daily chart of the S&P. Let me go back. Yeah, it's kind of interesting the way that and you can see that those two lows really sort of stand out from last year, right? And typically, I mean, I don't even know if that's a valid trend line or not. It was more of an interesting exercise. And of course, if I had candlesticks, I could theoretically connect those two lows and that low. So close enough for government work. But anyway, um, let me go to, there we go. Let me just go to, there we go. The date scale's on here. This is what I wanted. Just a standard old daily S&P chart we can look at real quick. Whoops. So annoying when these charts jump around like that. There we go. So let me zoom in a little bit. This is one of the S&P charts. I told you I have like 6 different views. This one's got the 50, the 100, and the 200-day moving averages on it. And you can see the beginning of, I'll put the beginning of the year right up here next to the legends. And so just to give us an idea where we are. And obviously, you've seen the other chart where I have the downtrend line drawn across these highs. And I'll tell you what's amazing is, a couple weeks ago, well, it's not really last week, but is this waterfall sell-off, right? After the consolidation there. That consolidation, I think, I have a pretty good feeling that the majority of participants, or the general sort of consensus, I should say, was that that consolidation was going to break to the upside, right? And at least make it up to 4250, whatever, maybe even up to the underside of some of these moving averages. But the fact that there was a waterfall sell-off out of that, I think, took a lot of people by surprise, and it was very interesting. And quite frankly, I mean, I'm starting to lose track of what caused some of this stuff, but I do know this. I do have a good memory when it comes to certain things. So if you can see my mouse here, right here at the 200-day moving average, back on, what was the date here? Right there at like 40 on 421. Right at 4,500 on the S&P, that is when Powell was speaking, and he was speaking to like the Economics Club in New York or something like that, and he started, talking really hawkish, like really, saying that, hey, we let inflation get out of control, it's unacceptable, we're going to have to, move expeditiously to control it, and all hell started breaking loose right there, right when the market was looking like, right when the market was, just had this little pullback and was looking like it was ready to bust back out and, kind of poke the new highs. And that sell-off, and I mean, that's the sell-off that really started this leg down, began with comments from Jay Powell. So I remember that very well. So anytime that he speaks, you have to be a little bit cautious about the market's potential reaction in either direction. I mean, sometimes, I believe it was last Wednesday, right? Is this last Wednesday? 6:15 is when the Fed announcement came out that they were raising interest rates, and the market just blasted higher that day, and which was kind of interesting. And then everybody, I won't say everybody, but the consensus was that, okay, hey, look at, we had the low yesterday. We just had this waterfall sell off. Markets probably now that, the sell the rumor, buy the news type of thing. And so I believe the majority of participants were convinced that, by the end of that day that we were going to start an oversold rally or whatever. And then the following day on Thursday, you had that big gap down in the low. So this is a crazy, crazy environment right now, and I'm not sure. Yeah, bigger picture. I've joked over the past couple years that everything kind of reminds me of the dot-com days, just the nonsense on Wall Street and the ridiculous valuations of a lot of companies and certain companies coming public that probably had no business being public at all, and just the speculation, the crypto craze and NFTs and all that stuff. I mean, it's zanier to me than during the dot-com days, but and there's the macro picture is just probably the craziest ever. But and then you throw in the Russia-Ukraine situation, inflation, out of control, and the pandemic, all that stuff, and we're kind of in uncharted territory. And so the S&P is, hovering right around bear market territory, right? Somewhere in this area is the over and under of down 20% from the highs, which began right at the beginning of the year. The I would say that the best thing about this sell-off is it's literally started right at the beginning of the year, so it's easy to sort of keep track of that rather than some random point in time. But anyway, here's the big problem I see with the market. I mean, there's a few of them, but one is one is that excuse me, it's so oversold as far as well, you can't really see the RSI on there. See if I can bring this up without screwing the chart up. Nope, I can't. This is all right. Maybe that fixed it. Let's see the RSI, which I have below here. There we go. There we go. I mean, it's kind of hard to see, but stretched up a little bit there. It got down to about 30, kind of double bottomed there, and bounced up a little over the past couple of days, but not nearly as oversold as it was back in January. But nevertheless, um, you get the RSI got down sort of to basically oversold territory. You got these moving averages overhead. There's tons of overhead resistance here, but the market feels like it wants to sort of rally. It seems like it wants to sort of rally, and so going back to what I was saying before, the Fed announcement here, the Fed announcement rally, and then that the day after it, that Thursday and Friday, I think it was kind of a bull trap. A lot of people thought it was going to just bottom out here and rally, and so I think they knocked out a lot of the bulls there. And then of course, yesterday after the 3-day weekend, we had a huge gap up and basically a trend day higher, and then today, huge gap down and now strength. So, I suppose I could draw some lines on here because it makes sense. I don't want to add an indicator. I wanted to add a trend line. Oh well. Anyway, that's funny. Where's my trend lines? Huh. I'll tell you what, these charts really can drive me crazy sometimes, but they are what they are. I've had to change over to these stock charts, and all right, there we go. What I was gonna do is draw a trend line basically across these highs, right? So this gap right here is sort of begging to get filled, in my opinion. And that's just the first one, right? I mean, you got a huge gap here, a huge gap there, but the market's tricky. It doesn't make it easy on people to do, to do different things. And so um, the odds are pretty decent of a bear market rally as long as there's no like really bad news that comes out. I mean, Powell could torpedo this thing in a heartbeat, but barring that, and barring any sort of other type of shock news, I think that, and this is just my opinion. I don't have a whole lot to back this up, but it seems reasonable that with the end of quarter coming up and how bearish everybody's been and the sort of, the dip buyers getting knocked out, this kind of sell off and that. Anyway, the market seems due for a bit of a relief rally, bear market rally, I guess you could call it. And so it's been a while. I mean, we had that one, and then we spent all that time going sideways, and so this little leg down. So I think the end of quarter positioning amongst institutions will probably contribute to that, amongst other things. And so anyway, the thing of it is here is that I mean, the first major hurdle here, it's a long way up to 3,900, right? And so, odds are that the market can probably battle its way back up to 3,900. If I was going to bet on that, obviously the stop would be, at the lows there. And so, and of course, everybody knows that that's where the stops are, but it makes sense. It's sort of like a stock chart, or sort of like a chart of an individual stock, I should say, where basically you find a point that has a decent risk reward ratio, and so there's a decent risk reward profile, I think, for the S&P here, moving up to at least 3,900, if not, this particular move could take it up to close this gap too, 4,000. So and if not, obviously, the stop would be right down there. And so, can they take out that stop? Sure. Yeah. I mean, anything can happen, but like I said, over the next couple of weeks, barring anything unforeseen, with the end of the quarter and the beginning of July and all that, and then headed into the holiday weekend, I'd say that there's a pretty good bias to the upside. Something funny here is, let me go to a weekly chart here. I won't say funny, but something interesting is that, I mean, we just broke some records here as far as the number of down weeks also too, right? I think it was 11 out of 12 weeks, 2, 4, 6, 8, 10, 11 out of 12 weeks, down, and this last week, prior to the 3-day weekend there, was really a knockout sort of, outside the pattern. It gapped down, and the weekly charts are sort of my go-to charts. Now this particular trend line here keeps moving on me, and I don't know why. Let me see if I can fix that. Jesus. I really miss my old charting platform, but it is what it is. But that's where that trend line is supposed to be. Let me see if I can save this here. There we go. Yeah, so that was kind of one of the telltale signs. Obviously, it wasn't that simple. I mean, we see lots of trend lines that look like that. This is a weekly chart, though. Obviously, we see lots of trend lines like this that get broken, and the market, has continued to rally up, but not this time, right? So anyway, over the next over the next couple of weeks, I would say that there's a decent likelihood, pretty good likelihood of that gap getting closed to start with. And then obviously, last week's low is like the low to worry about, but just keep this in mind though. And the other thing, I've been saying for weeks now on this very show that until and unless the market can get above that trend line, which is way up there, right? Um, on a weekly chart, nothing happens quick. If the market just chopped around and kind of rallied and went sideways for a long period of time, it would take the slope of that trend line would take a long time for it to to even get near that, right? So I don't expect the market up near that trend line anytime soon, unless the only thing I can think of that would create a rally like that would be an end to the war in Ukraine, right? And some interesting stuff going on. Speaking of that, energy prices like oil all of a sudden. Let me go back. Let me go to well, let me just go to a chart of I happen to have some energy stocks here on my list. As you can see, all of a sudden I'm back on log charts here. So let me go and put this on regular. And what I want to look at, I believe oil is down like 6% or something today. Okay, I don't know if this is actually the current price or not. Sometimes on these stock charts, the futures or whatever kind of I don't know if that's it or not. I got to wait for CNBC to tell me. But anyway, the price of oil has been coming down, right? So let me find a couple of energy stocks here, and here's one. CLR, that one's so-so. What am I looking for here? Oh, there we go. Look at this. Energy pipelines, right? KMI. Some of these oil stocks have been done like 8 or 9 days in a row, and of course that was the number one sector was energy. I guess we just look at XLE, XOP, but yeah. So this is kind of what I've been waiting for is a sell-off in the only sector. I mean, this is the only sector really, energy and some materials, which have also been hit, and so been the only sort of hiding place this year. All the other sectors are, have been obliterated, and energy has been the one sort of bright spot. And of course now, price of oil coming down. Powell says the market has already priced in the tightening. That's interesting. I'm watching the CNBC with the sound off, the little notes on the bug. But anyway, look at this. I mean, big sell-off in energy. And of course, the sell-off is coming from an extraordinary rally. See, that's always something to take into consideration. It's just giving back. It's just giving back a lot of the prior rally, right? So, but anyway, some of these energy stocks look really rough here, just because they sold off so quick and in such a straight line. Let's see. Let's look at back to. I don't know why. I never had this problem before, and all of a sudden, like some of my charts are log charts when I go to my watch list now. But anyway, so we're getting some decent sell-offs in energy, and I think that if we start to see some bottoming out, some consolidation, that some of these may actually set up for decent swing trades, right? The craziest thing, this is a really good example too. The craziest thing is that yesterday there was, after the big sell-off, there was a huge gap up, and obviously pivot low, and then they all gapped down really big again today. And so I believe I read in the news this morning that that Biden is going to today. He's going to ask Congress to put a 3-month suspension on 3-month suspension on the federal gas tax, right? To lower gas, and then he's going to ask states to eliminate their gas tax. And so, how that actually affects the energy market, I don't know. But I saw the guy from Goldman Sachs come on and say, hey, if what you're trying to do is, based on supply and demand, um, if you're eliminating the tax on it, then you're just going to increase the demand, right? And so that only makes sense. And it's just crazy that, I mean, it seems like the worst solution. I mean, if what you're trying to do is reduce demand, if you reduce demand, high prices reduce demand. People tend to drive less because it's expensive, and so eliminating the federal gas tax just seems like, the opposite of what you would want to do if you want to reduce consumption. Of course, that's a whole debate in and of itself. Anyway, flipping around through a handful of these energy stocks is an interesting picture. And so, I mean, here's the other thing. This is what's so diabolical about the current market environment is this, okay? So, the number one sector, you get all this great rally, you get a breakout above these highs, everything's looking good, and then they just pull the rug on it in a straight line. 10 days, you're already giving back, a month's worth of gains. And then to make matters even worse, look at yesterday. Yesterday, a lot of people probably thought, okay, well, now it's time to jump in here because you got a pivot low, you got, a rally, you just had this big sell-off, and so look what they did today. And there's a lot of these energy charts that look like this. They basically, oil was down like I don't know, like 4 or 6% or something. There you go. So oil's down 5.8% today, right? The futures contract, which is significant. And speaking of that, these percentage moves that we're seeing in the indexes, individual stocks, energy, copper, all that kind of stuff, these kind of moves that we're seeing are just, indicative of an erratic market and a dangerous environment. So bear markets are tricky because you'll see a stock that's down 70-80%, and then it'll have a 10-12% rally, and CNBC will be like, oh, such and such is up. Well, here's a good one. DOCU, right? They flashed that on the screen just a second ago, talking about how it's up, up 5.5% or whatever today. But I mean, look at this chart, right? So this thing was $300 and something, and now it's 60 something. You look at like today's bar on the chart. Another good one's like this Coinbase or whatever, right? I mean, this thing yesterday, I forget what the percentage gain was yesterday, but you see a lot of these where these stocks are just they're so destroyed, right? So destroyed that, they're going to have double-digit bounces off of these nominal numbers. I mean, this thing was, $375, and now it's down around 50. And I mean, this chart looks terrible. And so if this thing bounces, 10-15% on a given day, or if it's up 20% or whatever, it's still, practically meaningless in the bigger context of things. And so don't let that fool you, right? I mean, the only thing that's kind of a big deal about that would be to, catch a day trade in something like this. And quite frankly, today's price action shows why, in this sort of environment, holding overnight is even sort of risky because you think after yesterday, people got long this stock thinking, okay, here we go. It's a perfect setup for a big rally. And then look, they gap it down this morning, and it's still below yesterday's close. And so And that is just an example of a chart. There's nothing about this stock that I like. So real quick, I don't want to drone on and on here today. We have one open trade in JO, and there's the entry. And as you can see, it's kind of been hovering. It broke above the entry, and kind of held there, and then came back down and sort of retested this area, and now it's back above it. Quite frankly, out of a pretty decent list of stocks that I got here, it's some of them are down. Some of these energy stocks are still down considerably today, but so this is hanging in there. This pattern is looking just about as constructive as it was for the entry. And so this is pretty low volatility, which is fine. And just basically looking for a cut back up towards these highs here. I guess we'll have to see, but hanging in there. It's been above and below the entry. Now it's back above it and looking pretty good. So it's kind of a low volume. It's very choppy from day to day. The percentage moves have been a little bit bigger recently than normal. So, but all in all, looking pretty good. You remember we had U.S. Steel back over here in this little consolidation, this sell-off and this consolidation. U.S. Steel was, and we've had quite a few of these, right? Like these stocks that were potential trades, they never triggered in, and then they just broke down. And so this is a pretty ugly pattern. I mean, sure, you could draw a trend line across these lows. Actually, it's hitting a low today, but at some point, it could rally back up maybe. But now that it broke down from this consolidation, the system just deletes them from the list. Speaking of which, this one's really, really close to. This one's close to losing it too. Unfortunately, this was another one that if you draw a trend line across these lows, right? It had a pretty decent looking little pattern. Pretty decent little pattern, and then you got this sell down, this consolidation. That was sell off was sort of questionable there, but ended up rallying back up. It actually came pretty close to triggering us in here, right, on this turn. And quite frankly, if looking at it like right there, boy, that was a pretty decent looking setup just at a glance. Looked to me like, hey, here we go. Nice textbook. Like, look back here, sell off, textbook pivot low, big rally. And so it kind of looked like that was going to happen. And then we did not get triggered in, right? And then boom. And so anyway, this is, I had to look at, the exact number of these lows, but this is really super close to also being, one of many. You remember a while back, Ford, sell off in this gap down and consolidation here, and then, right around this area here, it looked like it was going to hold the uptrend. I mean, this sucker was. Where the heck is my trend line? I don't even know why. Typically, when I open this up, it's driving me crazy now. Typically, when I open this up, it's not on add indicator. It's on maybe I'm just clicking the wrong thing here. Here we go. Yeah, I'm more confused. I like to blame stock charts for. There we go. So, back over, and prior to this trend line getting broken, back over here, this was ideal sort of setup for a swing trade after this. And so anyway, this was pending way back over here in like March or whatever. Never quite triggered in, and then you can see how it broke down. So anyway, we have one open trade in JO that we just looked at. There's a couple. I jotted down a couple of stocks. Let's look at this. MOS. Mosaic, which is, I believe it's a fertilizer stock. This got kind of an interesting pattern too. Oh, jeez, do you see that? Trend line. There we go. Just for the fun of it. And this is just, this is just one that I've added to my watch list here. I think you get the gist. So, long-term uptrend. It really went sort of parabolic there, and now it's coming back down. There's the 200-day moving average. So, this is a type of stock where, and obviously, it's still, it's headed down. It could easily go down to this trend line. It could do something like Ford did. It could spend the next few weeks or month coming down to this trend line and then break below it and look out. It could try and consolidate around these prior highs here, which would kind of make sense. And that 200-day moving average, whoop, yeah, there's a bunch of support right around, this area here too. So anyway, support at the 200-day. You'd want to probably see it hold the 200-day, maybe poke below it, tap that support, come back up. But anyway, it's so difficult right now because the market's been headed down, 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 and so finding stocks that have had pullbacks and sort of basing out is difficult because we're still, we're a couple of days away from a low, an official bear market in the S&P. And so there's not a whole lot of stocks that are set up right now, but I'm starting to, some of the energy stocks are starting to look interesting. This CCJ, or something about this. Yeah, it's below the moving averages, but something about this looked kind of interesting to me too. I see what's happening here. Like when I click that, I have to click on trend line, or else I just drag the chart. But yeah, it's tricky. When I look at something like this, I think to myself, okay, it's sitting right on support as we speak today. And so, could it poke below it and then rally back up? Yeah, but the thing of it is, you got tons of overhead resistance. There's a lot of zigzag charts. Quite frankly, there's quite a few potential trades out there, short-term trades. I'm not really talking about swing trades. An ideal swing trade is more of you have to be patient because you want to see a stock like, say a stock like this come down and like sort of base out, right, and start to turn up. What I'm seeing now is a lot of like, V-shaped moves, like, straight down, straight up, straight down. And so, but anyway, like for a quick short-term trade, if this breaks over 2250 with a stop at today's low, right? You could play it up towards 25 here and see what happens, raising the stop, peeling it off, but you could get a quick run in something like this. And the same thing with some of these other energy stocks. I mean, they could theoretically be setting up for well, I won't say ConocoPhillips is set up yet. This is kind of a mess, but when I was looking through them this morning, there's a few of these things that have some potential, right? Most of the energy stocks, I mean, for a quick trade, you'd want to be looking over yesterday's high. So anyways, we'll have to see, but my guess is, anyway, so there's a good example of what I was talking about before. You get a sell-off like this and then sort of a consolidation. This obviously, and I'm looking way back here, like December last year. That was a good sort of swing trade setup, right? Even though you had this little knockout, but you can see a lot going on back there, right? One of these days I'll learn how to use these charts. but you got that nice little W pattern. It's right around right at the 200-day moving average. Um, perfect. Oh, jeez, I drive myself crazy with this. I guess I need to practice more. Anyway, you can see how, and obviously in hindsight, but looking at this at the time, I mean, this is more of an example of kind of what I'm talking about here. That was a pretty decent, swing trade type of setup that I'd like to see. It's got everything. It's got the trend line break, the W pattern, the flat top, everything about it. Even came down and retested whatever, but like right now, there's just no telling. This thing's in no man's land between 60 and 70. And so, you can trade these sort of, bear market bounces or these, quick sell-offs or whatever, but we're not in the type of environment where I don't think a lot of swing trades are going to manifest. That doesn't say that we won't have some potential setups, because finally, for the first time in a while, I think that there might be some potential setups on the horizon, and primarily in the energy space. And so we'll just have to see what happens. But anyway, it is what it is. Back to real quick, back to the old SPX chart here. Um, still a huge mess. This little 20%, I think it was like 24% at the lows. Catch a little bounce here, but it's still obviously a bear market, and I do not think that I mean, have we seen the lows? Doubtful. Can we catch a decent little bounce here? Is there a bounce on the horizon? That's probable. More than anything, I think, based on the end of the quarter. Um, and so we'll just have to see what happens. It's very difficult to project what kind of a bounce we're going to see, but if I had to just guess, I'm just throwing this out here. We get a bounce up to, we at least close this gap. Seems like pretty probable. Like I said, unless something unforeseen pops up. And so anyway, I'm going to go ahead and wrap this up. So thanks for tuning in. I will see you back